balance sheet. So 14, 14, 28 marks will be covered there. 14 marks already covered by bookkeeping. Preparation of final accounts. The final accounts are prepared after preparation of trial balance. The trial balance contains the balance of all accounts from the ledger which was discussed in the previous unit, that is unit number 7 that we completed. There are 3 types of final accounts involved: trading account, profit and loss account, and balance sheet. The starting point for preparing final accounts is the trial balance prepared by the bookkeepers. All the figures recorded in the trial balance are used in the final accounts. The trading account and profit and loss account are both accounts in terms of double entry bookkeeping. This means that the amounts recorded in these accounts must also be recorded elsewhere in the bookkeeping system. By contrast, the balance sheet is not an account but is simply a statement of account of balances remaining after the trading and profit and loss accounts have been prepared. Trading account. Trading account is an account which is prepared for ascertaining overall result of the trading, that is buying and selling of goods. But those days there were small manufacturing units, and the traders used to collect and sell in a huge way. But nowadays the types of business have changed. Manufacturing units, now we have huge manufacturing units. So the cost of manufacturing or cost of goods sold is also included in the trading account. Ascertaining overall results of the trading is ascertaining the gross profit earned or gross loss incurred as a result of trading activities by a business during a particular accounting period. If the amount of sales exceeds the amount of purchases and expenses directly connected with such purchases, the difference is termed as gross profit. On the contrary, if the purchases and the direct expenses exceeds the sales, the difference is called the gross loss. All expenses which relate to either purchase of raw material or manufacture of goods or direct expenses which are recorded in the trading account. Thus, trading account is a part of income statement. Meaning of gross profit. Gross profit generated from carrying on the basic activity of a business. The basic activity of a business comprises of buying and selling of goods, the excess of revenue generated over cost manufacture of goods known as gross profit. In other words, gross profit is the excess of net sales over cost of goods sold. So gross profit equal to net sales minus cost of goods sold. Net sales equal to sales minus sales returns or returns inward. And cost of goods sold equal to stock, inventory, opening inventory plus net sales, net purchases minus closing stock or closing inventory. You have come across the term inventories or stock, the same thing, in the bookkeeping section. That is an asset, right? Net purchases, purchase minus purchase returns or returns outward. Or cost of goods sold equal to opening stock or inventory plus purchase plus expenses incurred in connection with purchase and manufacture That is direct expense minus closing stock. So minus closing stock means if we treat it on the debit side, it is less. And that is why we take it to the right hand side, that is on the credit side, to make it to give it a positive sign. So let us take an example. From the following information, calculate cost of goods sold and gross profit. Opening inventory 12,000 rupees, cash purchases 16,000, credit purchase 28,000, purchase return 3,000, cash sales 39,000, credit sales 72,000, sales return 4,000, wages 8,000, salaries 9,000, rent 3,000, direct expenses 14,000, and closing inventory or closing stock 5,000. Only the item that will not be included in the trading account is the salaries. Wages are included, wages and salaries together under the heading name wages and salaries included. But salaries itself, the heading salaries is not included, and salaries and wages, that heading is also not included. Cost of goods sold, opening inventory plus net purchases plus expenses incurred in connection with purchases, direct expenses minus closing inventory. Cost of goods sold equal to opening inventory plus net purchases plus expenses incurred in connection with purchases, direct expenses minus closing inventory. That equation was given. So opening inventory 12,000, net purchase, cash purchase 16,000, credit purchase 28,000, minus purchase returns 3,000. Okay, direct expense 8,000, cash 14,000, credit minus closing inventory 5,000, so 70,000. Now gross profit equal to net sales minus cost of goods sold. So net sales equal to cash sales 39,000, credit sales 72,000 minus 4,000 sales return. So that is net sales minus 70,000 is the cost of goods sold. So we get 37,000. Contents of trading account. So this portion is very important from page number 5 to page number 10 for trading account is very important. Opening stock or opening inventory, the stock of goods remaining unsold at the end of the last year is termed as the opening stock of the current year. In other words, the closing stock of the last year becomes the opening stock of the current year. So this item is shown as the first item on the debit side of the trading account. First item on the debit side of the trading account. Okay, it will be in the tabular format. So top left corner, opening stock. 2 opening stock. Debit side means 2, credit side means buy. It should be kept in mind that there will be no opening stock in case of a newly started business. Opening stock will include the stock of raw materials, semi-finished goods, and finished goods. This item appears on the debit side of the trial balance, and stock of goods is also termed as the inventory, and therefore opening stock is termed as the opening inventory. Purchases includes goods which have been bought for resale. The amount of purchases appearing in the trial balance includes cash purchase as well as credit purchase. Purchase account shown debit balance and hence it appears on the debit side of the trial balance. While preparing the final account, it is shown on the debit side of the trial balance trading account. Purchase returns, when goods are returned to the business by the business for some reasons, returns outward account or purchase returns account is credited in the books of the account and suppliers account is debited. So credited means less. purchase returns or less returns outward. Okay. Direct expense, in case of trading concerns, all expenses incurred in purchasing the goods, bringing them to the godown and into sellable condition as treated as direct expenses and charged to trading account. For example, carriage inward, freight, wages, etc. In case of manufacturing concern, cost of converting raw materials to finished products form part of direct expenses. So direct expenses to be debited to the trading account, including the following: wages. If the wages and salaries is given, it is shown in the trading account. On the contrary, if salaries and wages is given, it will be shown in the profit and loss account, as I said before. Wages and salaries, those two headings are included in the trading account, debit side, expenses. They are expenses. But salaries and wages are not included in the trading account. They are a part of profit and loss account. If wages are paid by bringing a new machine or for installation, it will be added to the cost of machine, and hence such expenses for such expenses or wages will not be shown in the trading account. It will be a cost of the machine itself. Okay. Carriage inward or freight. Carriage inward or freight is the expenses which are paid for bringing the goods to the shop or to the factory and hence should be debited to the trading account. Manufacturing expenses such as coal, gas, fuel, water, power, factory rent, factory lighting, etc. are expenses which are incurred in the manufacture of goods and hence these are shown on the debit side of the trading account. Dock charges, import duty, customs duty, excise duty, octroi duty. Octroi duty is the amount levied by municipality when goods enter the city and hence debited the trading account because they are connected with the purchase. Royalty. If the royalty is on the production, then it should be included in the trading account. If the royalty is based on sales, then it should be a part of profit and loss account. All right. Items should be shown on the credit side of the trading account. Sales account appearing on the trial balance shown to the total sales made during the accounting period. Both cash and credit sales. Sales account shows credit balance and it is treated as revenue and as such it is shown on the credit side of the trading account. In respect of sales, the following points must be noted. Only the sale of goods is trading as sales for the purpose of preparing trading account. If sales include sales of fixed assets, it should be deducted from such sales. Okay. যদি সেলসটা পিওর সেলস হয়ে থাকে গুডস তাহলেই আমরা রেভিনিউ অ্যাকাউন্টে ধরবো ক্রেডিট সাইডে। যদি কোনো ফিক্সড অ্যাসেটস হয়ে থাকে সেলস তাহলে আমরা নেট আমরা সেলস থেকে ওই ফিক্সড অ্যাসেটস এর সেলসটাকে মাইনাস করব, ওটা প্রফিট এন্ড লস অ্যাকাউন্টে চলে যাবে। If any goods have been sold on approval and included in sales, it should be deducted from sales. If the approval period has not expired, such sales should be recorded separately. Sales return, when goods are returned by the buyer for some reason, returns inward, or the sales return account is debited in the book account and the buyer account is credited. Sales return account appears on the debit side. Sales return account appears on the debit side of the trial balance. There are two ways of showing sales return on the trading account. It may be shown on the way of deduction from the sales in the trading account, an alternative way to show it sales return to put it on the debit side of the trading account. But normally it is shown by way of deduction of sales in order to show the figure of net sales. Closing stock, if goods remain unsold at the year end, is known as closing stock. It is valued as at cost price or market price, whichever is less. It includes the closing stock of raw material, closing stock of semi-finished goods, and closing stock of finished goods. Accounting treatment of closing stock will be where the amount of closing stock is stated outside the trial balance. Normally, the closing stock is given outside the trial balance, and this is so because its valuation is made after accounts have been closed. So it is incorporated in the books by means of the following: closing stock account debit to trading account. Okay. If the closing stock is stated inside the trial balance, if it is, inside the trial balance, then we do not include the closing stock in the trading account because it has already been counted, okay, and subtracted from purchase account. So there is no need of inclusion in the trading account. Valuation and recording of closing stock. Closing stock should be valued either at the cost of the market price, either at cost or the market price, whichever is lower, and should be recorded accordingly. Journal entries leading to preparation of trading account, those things are not required. Now, page number 10 is very important. The heading should have been, there is no heading there. From the extract, is to such and such is written. The heading should be trading account of Ram and Sham Farm for the year ending on 31st March 2000. So 31/3/2000 for the year ending on. So as usual, two opening stock. Opening stock 2. First item, top left corner. Another thing missing is on particulars here, there should be debit, written the word debit, and on the amounts space on top of that, there should be credit, CR or CREDIT, BIT, credit, DIT, CREDIT, credit. Okay. Purchases, less purchase returns or returns outward, wages, to wages and salaries, to direct expenses, to carriage on purchase, to duty on purchase, to gas, fuel and power, to freight, cartage, manufacturing expenses or productive expenses, to factory expenses such as factory lighting, factory rent, etc., to octroi, to dock charges, cleaning charges, to import duty, to customs duty, to excise duty, to insurance premium, to royalty on production, to profit and loss account, etc. Profit and loss account comes later, not now, because we have to add the both sides, both the debit side and the credit side, whichever side is greater. Actually, whichever side is less or lesser, we put a balancing figure. If the right hand side is greater than the left hand side, then we put a balancing figure here as a profit and loss account, gross profit transferred. If the left hand side is greater than right hand side, we write profit and loss account, gross transferred. So the credit side starts with buy sales, less sales returns or returns inward, and buy closing stock. There is no other item. So what you do not first write profit and loss account gross profit transfer, or profit and loss account, gross loss transfer. They have shown at both the side, but there should be only one, either gross profit or gross loss, not both. Either you make a profit or loss, or there is no profit and loss at all. Okay, zero. May happen, but generally it doesn't happen regularly, once in a blue moon. So there is an exercise also. You can take a look. Stock on 1499, 1499, and this is 2000. So this is the opening stock. 1499 is the opening stock, 10,000. Carriage on sales, 2000. That is on the debit side for sales generation. Purchases, discount, this is purchase discount, don't know, maybe purchase discount or discount given to the buyer. Sales, purchase returns, octroi duty, returns inward. Return inward means sales return, productive wages, freight charges, excise duty, coal, gas, water, salaries. Salaries will be included, trade expenses will not be included. Stock as on 2031, say 2000, this is closing stock, 15,000, outstanding wages 5,000. So you have to debit the outstanding wages along with the productive wages. So this is outstanding. Goods taken by Ram for personal use, the drawings account that is not included in goods taken. So this should be a part of trading account, because goods taken, it is concerned about the goods, so less. So what do you get here? In the book of Raman Sham trading account for the year ended 31st March 2000, to opening stock 10,000, purchases 60,000, less purchase returns 2,000, 78,000, less goods taken by Ram for own personal use 1,000, so 77,000. To octroi, to freight, to excise duty, to coal, to productive wages, to add outstanding wages, so 15,500. Okay. Sales 1,20,000, and sales returns inward 3,000. So discount is not allowed. So this discount is not a purchase discount. This discount is not whether it's a purchase, it's a sales discount. So it's a part of profit and loss. In the trading account, only sales and sales returns are included. Nothing else is included. Okay. Sales carriage on sales is not included. Okay. All right. Freight, 2,000, that is included. That is for bringing the material, freight. So what you get is 1,32,000, and here you get 1,32,000. So today, up to trading account, you try to more illustrations on presentation of final accounts and try to understand with the illustration there. And one day we'll do the math on the board after I complete trading account, profit and loss account, and balance sheet. And then we'll do a math on the board. First the trading account, then the profit and loss account, and then the balance sheet. Okay. So you look at the example why some accounts have not been included in the trading account. That thing you need to remember. Otherwise, there will be mistakes in the exam. So thank you very much for attending. Have a good night. Okay, sir. Thank you.